Halstead Property, the real estate leader in video technology.
Welcome to Halstead Property's Behind the Numbers web show for the second quarter of 2011. I'm your host, Angela Cohen, and I'm joined today by Halstead Property's Chief Economist, Mr. Greg Heym. He's here to give you the Manhattan residential real estate update for the second quarter. And we're going to deliver it to you in under a couple of New York minutes. Today we're on location downtown from the West Village at an immaculate four-story townhouse on beautiful Bank Street. It was originally built in 1844 and recently renovated from top to bottom. The renovations concentrated on modern lifestyle elements while still maintaining the charming architectural features of a classic Greek Revival home. The townhouse comes with 6 separate units, including a 2,000 square foot owner's triplex, and is exclusively represented by Jill Jordan, available by appointment only. Let's begin where we always do with Greg's analysis of the Manhattan apartment market.
Thanks, Angela. Manhattan apartment prices averaged $1.43 million during the second quarter, which was up 4% from the year before. This figure, though, was inflated by a big pickup in luxury closings last quarter. The median price, which measures the middle of the market and isn't as impacted by high-end sales, actually fell 1% from a year ago to $835,000. The number of sales fell 7% compared to 2010's second quarter, but the number a year ago was aided a bit by the first-time homebuyers credit.
That's great. So then how did condos and co-ops fare?
Well, a lot of the high-end sales that I mentioned earlier were co-ops. That pickup helped bring the average price 14% higher for co-ops than a year ago. In fact, sales of co-ops for $10 million or more almost doubled compared to the second quarter of 2010. Condo prices averaged $1.67 million last quarter, down 1% from a year ago.
Let's go around Manhattan by neighborhood to see how each one fared.
Well, on the east side, pricing gains were led by 3-bedroom and larger apartments, whose average price was 15% higher than 2010's second quarter. The west side showed a similar pattern, as 3-bedroom and larger apartments there saw their average price jump 19% compared to a year ago.
With pricing gains on the east and west side, did we see the same in Midtown and downtown?
Well, in both the Midtown East and West markets, we saw the average price per room rise for pre-war co-ops while falling for post-wars. Condo prices per square foot were up slightly in both markets from the year before. In the downtown market, the average price rose 8% for studio and 2-bedroom apartments. 1-bedrooms were the only size category not to see their average price increase in the downtown market compared to a year earlier.
I see that new developments substantially increased prices in northern Manhattan.
That's true, Angela. The uptick in new development activity helped bring the average price for 2-bedroom and larger apartments in northern Manhattan up sharply from a year ago. These new development sales, which tend to be all condo, helped bring the average condo price per square foot up 7% in the northern Manhattan market compared to the second quarter of 2010.
There's lots of mixed news in the economy lately, so what are the most important economic indicators of the market, in your opinion?
Well, we always look at unemployment, and in May, unemployment in New York City was at 8.6%, which is better than the national rate and a full percent lower than where it was in May of 2010. Much like the national economy, though, hiring has been sluggish in New York City, although there were gains in May in professional and business services, education and healthcare, and the all-important financial sector.
That's good to hear.
It is.
So how have mortgage rates affected the market?
Well, the lack of any real sustained job growth across the U.S. has kept mortgage rates low. They fell during the quarter and have remained low the last couple of weeks. I think that's a trend that's probably going to continue for some time. The good news for us is that that does help affordability for potential buyers out there.
Absolutely. Now we're on to our Ask the Economist segment of the show. Francine Steele from Facebook writes, are there any plans to expand the analysis to the outer boroughs of New York City for the web show?
Well, Francine, we are already doing Brooklyn market reports twice a year and recently introduced an annual Riverdale market report. So it could just be a matter of time till some of this content finds its way into this show or maybe even its own program. We also have market reports for Lower Fairfield County in Connecticut and Hoboken and Jersey City apartments. So please go to halstead.com/market reports and check out our reports as they seem to be coming out constantly.
To have your question answered, feel free to email us at halstead.com, tweet your question on Twitter to Halstead, or post on our wall at facebook.com. Thanks so much for joining us for our second quarter segment of Behind the Numbers.
For my lovely co-host Angela Cohen, I'm Greg Heym, thanking you for watching our show. Have a great summer, and we'll see you again next quarter.